guys, Justin here from Chart Smart Trading. Welcome. I wanted to quickly take some time to go through an indicator which is pretty powerful if you're trading any of the American indices and certainly any of the American stocks. And it's something which is very well known or very commonly known, but not many people know exactly how to use it and how to trade with it. You know, whether you're looking at an intraday setup or a longer term swing trade, this indicator can really give you a lot of powerful information. So what am I talking about? Well, it is the VIX. So as I said, I'm sure most of you have heard about the VIX. It's the CBO VIX. It's often known as the fear index or the fear gauge. I'm not going to go too much into how the VIX is calculated. If you want to have a look at that, please Google it. But I did want to go into how you might want to use it in your trading, because, you know, when you hear the VIX is going up or the VIX is going down, or how do you actually trade that? Because, a lot of us have heard about it, but we're not actually sure what to do with it. Okay, so it's actually pretty simple and it's pretty powerful. So I wanted to just show you, this is the VIX that we're talking about right over here. Okay, and I'll take a look at this. This is percent of stocks trading above the VWAP for the day, but let's not look at that for now. We really want to just focus on this, the VIX. Okay, what I've got here is a standard VIX chart. We're looking at the 15-minute chart right now. So this is very much intraday. And all I've done is I've plotted standard Bollinger bands around the VIX with a 2.5 standard deviation setting. You can see the settings there. It's pretty simple. I'm dealing with the live VIX. This is a live CFD. It's as you trade, you're getting a real-time read, and you're going to need that to trade effectively. Okay, so what we really want to do is look, when the VIX goes up and gets pretty high, this is when fear is rising. This is when people are terrified. The market is crashing, the bottom's falling out, we're all going to die, kind of stuff. And when the VIX falls down pretty low, this is when the market's rising happily. Everything is fantastic. There's nothing to worry about. Okay. Now, what we find in life is the same as in trading. When we are most worried about something, that often passes by and we find out that it wasn't as bad as we thought it was. And when things are going as peachy and as wonderfully as possible, often we have to watch out that things might get tricky going forward. So what we really want to do is find these extremes in the VIX. And the Bollinger Bands help us to do that. The VIX very, very rarely stays outside of these bands or closes outside these bands and stays there for long. You can see it pops out for 1 or 2 bars. Here we go again. Pops out for 1 or 2 bars, and then it goes straight back inside the bands again. Okay, so we're looking to identify, and you can do the same thing on the downside. Kind of gets to the bottom here, gets to the bottom here, gets outside here, and it just immediately pops back inside. So really, this is what we're looking for, and it's quite easily identified by the Bollinger Band settings. And when we get these moves outside, I'm going to just concentrate on these breakouts to the top in today's session, but you could use breakouts to the bottom just as effectively. It's exactly the same principle. So this is a 15-minute chart. This is going back, I think, October last year, I'm not sure, November last year, 2018. So let's have a look here. I'm going to just highlight every instance where the VIX pops out above these Bollingers here. Okay, so that one there wasn't. Here we get another little pop here. We get another little pop out here. We hit the top Bollinger Band there. We pop out there. We pop out over here. We pop out over here. Okay, nothing over there really. Okay, so we've got 1, 2, 3, 4, 5, 6, 7 instances over about 10 or so days, 2 weeks. Okay, so what we really want to do is when we see when we see these instances where the VIX reaches the extremes, and the nice thing with plotting the Bollingers is they're going to react to the volatility of the market. So whether or not there's low volatility or high volatility, you're going to see them move outside of these Bollingers as actually relevant to the current state of the market, which is extremely effective and extremely powerful. And let's just take a look. What happens every single time the VIX pops above the Bollinger? We see that the markets have been selling off, and there's a lot of fear. As I mentioned earlier, when the VIX gets up, there's a lot of fear, and you can see every time we pop up, the markets have been selling off. Okay, so this does not mean it's the end of the world kind of fear. It does not mean major sell-off market kind of crash kind of fear, although it can on a larger scale. We're looking intraday here, but it's more a sense of we're not going up anymore, and we're going down, and there's a reason to be fearful and to take out some kind of insurance against that. But when we get to these extremes, there's too much fear. If everybody is terrified and if everybody is selling, who's left to sell? You know, who is left to continue that selling process? And what we often find out is we see market bottoms at that point. And let's just see what price does each and every time we pop out, even if it's a small bounce, even if it's a little move. We get these moves to the upside every single time we see the VIX moving out. Okay, so these are the 1, 2, I think there's about 7 instances here where the VIX pops up above the Bollinger here, and you can see with almost startling accuracy how each single time you could have traded to the long side and successfully made some decent cash. And you know, when you look at these moves, if you look at, for instance, you know, if you were to pick up the bottom here and trade up here, you're looking at 50, 60, 70 S&P handles, 70 S&P points. It's about 700 Dow points. It's a very, very decent move, you know, and some of these certainly are even bigger. You know, but even the small moves, this one, you know, a move like this is 20 or 30, you know, that's 200 or 300 Dow points. These are very, very nice moves, very tradable. So, you know, this is a very, very powerful way of understanding where the S&P is sitting and where and how to trade it. You know, the other thing you want to be doing, looking at this, let's just clear this up a little bit, is if we get a bit of selling, like we get here, at this point here, we see the markets sort of selling off here, just constantly selling, all the way down here. The temptation for many of us is when we see this kind of a trend developing here, like this, is the first thing we want to do is go short. We want to sell this all the way down. Well, what the VIX tells us is that when we get up here, we don't really want to be, we're not really interested in following this trend any further down. And that at this point here, we want to be taking profits, we want to be closing down our short trades. And the last thing on earth we want to do is be looking to go short anywhere in this region as we approach these Bollinger Bands up here. That is the last dying gasps of the bears as they sell out here, before we get this big pump higher here, which would rip your head off. You know, if you're taking a decent short position down here, this is going to hurt. This move up here is going to hurt. So not only does the VIX help you to identify these possible trade entries, it also helps you to control your impulses to say, I'm not going to get involved in chasing the market when the VIX is getting up in this area here. Instead, I'm actually going to be looking for the VIX to roll over, and as the VIX rolls over, the market's going to rise up. So instead of looking for the short position at this level down here, as we're getting down here, you're starting to think more about this market is likely to start moving up or down here. You know, we had this lovely sell-off here. This is the worst time to start thinking about selling, when the market is selling off like this. And the VIX is going to be telling you that very clearly. It's time to start thinking about exactly the opposite of what everybody else is doing. If you can deploy this in your trading, you're going to save yourself a lot of heartache and really be able to profit from it. The good news as well, let me just move this up here, is that this is available freely. If you look at TradingView over here, you can log on to TradingView.com. You can create a free account for yourself and you can stream this information live into your charts and make decisions that you might not have been able to make before, just because you now have an understanding of what this VIX can do for you. There is more. We can also start aligning the percentage of stocks above VWAP. I may cover that in another session, as that is quite interesting to align with it. If you do want to get in touch with me, please by all means log on to the site chartsmart.co.za. You can contact me there, email, all my details are there. Guys, I hope you've enjoyed this and we'll see you soon.